All right, we are live. Hi, everybody who's already here. We're going to give you a couple minutes to let everybody else filter in. Usually takes a few minutes for folks to join. But while we're here, we do always like to, just have a nice little banter with our guests. And Allison, I know you were recently at MJ Biz. Happy Cabbage was recently at MJ Biz. So Andrew, Allison, what were your thoughts? How did it go? I didn't go this year. Obviously, I wasn't there with y'all, but seeing all the hot takes on the internet, would love to know how you felt.
I thought it was great. I've been in this industry for 10 years and I've never gone before.
Oh,
I
wow.
I thought it was great. I didn't go to the conference. I just went to the networking events.
Yeah. Yeah.
Um, but I thought it was great.
Yeah, that's how I did it last year. I mean, actually, that's how I've done it for the last few years. It's just like whatever really cool after parties and or networking events that are taking place sort of in the ecosystem tends to be super high value. I've always found more value in that than walking the floor personally.
Yeah, agreed.
I had a great time. I had a great time. I don't think I left the Cosmopolitan though.
Yeah, Andrew just posted up at the Chandelier Bar wearing a Happy Cabbage shirt and, business.
I actually ran into someone I went to high school with who I hadn't seen in 15 years who works in the industry. And I talked about high school till like 3 in the morning at the Chandelier Bar on the last night.
Well, that's a unique MJ
Oh,
Biz take.
I know. Yeah.
so I had the experience was great, but at the end my wallet got stolen. So do
Oh
you know, I
no.
was freaked out because I was like, how am I going to get home? And do you know that you can travel without a license? Like it takes like an hour and a half to 2 hours to get through TSA because they have to pull you aside and do all the stuff, but you can
Wow.
get home without a license or an ID. I
Well,
didn't
that's
know
good to
that.
know. Should I ever find myself in the unfortunate
Yeah.
situation you found yourself in?
Get there, allow yourself 2 hours. That's about what it takes.
Man, I've luckily never been subjected to crime in Vegas other than any crimes I might have done myself. It's easy to do
Yeah.
crime in Vegas when you can't smoke weed anywhere, you know what I mean?
Well, I mean, I would say it's good, Alton, that you still had a really good experience despite that unfortunate ending.
Very much, very much. All right, well, I think we have enough time, enough people in here. I'm going to go ahead and kick us off and share my screen here. So, thank you all for joining. Today, we're going to be talking with Alyson MacMullan. Alyson is, I call her a super buyer. She's not only been in the industry for 10 years, but she's also has an experience, storied history of working at some of the top retailers in the nation and managing buying and inventory for them as well. So, what she comes into the industry with is a very rich set of talent and experiences that she's going to share with you guys today and has been doing a lot of work in the cannabis industry, like what she just said was for 10 years now. So a lot more coming from Allison a little bit later. But for those of you who may be joining us for the very first time, who don't know who Happy Cabbage is or what Happy Buyers is, our tool that helps buyers in the cannabis retail space, I'm gonna give you just a little bit of an intro on us. So, we sort of obsess about what retail buyers deal with on a daily basis. When we look at the cannabis industry and we try to assess what is the largest problem that exists in the cannabis industry, it's cash flow management at the retail level, and it's specifically with inventory. So we built a tool that helps you stock what sells and helps you not stock what doesn't. Essentially, like helping you with menu planning, inventory budgeting, and preventing you from over ordering, which is really like at pandemic levels of problems with how cannabis retailers are operating currently. The amount of money that you have currently sitting on your shelves in overstocked inventory would shock you because you don't really have access to the data that you really need to see to be able to get an accurate read on that. Most of the buyers that work with us on average are going to be saving $150,000 in overstocked and aged inventory within the first 3 months. And that's just because they're looking at better data, they're getting better numbers, they're getting better equations, and they're making better decisions on how to restock their shelves based on those. Not only are we saving them that amount of money, but without them having to mess around in spreadsheets and do all these equations themselves, we're saving buyers 10 hours a week on average as well in just time spent in spreadsheets. We're here to liberate you from the spreadsheets. And we do that with AI and machine learning and data and, data science. So we just have a really great tool. It helps you do this a whole lot faster and it helps you do it a whole lot smarter. We've also helped reduce the days of supply on hand by 40%. So 17 days less of days supply on hand, which means you're reordering faster and tighter. That's keeping cash flow available for you to use however you need to use it to grow. People who use Happy Buyers are opening new stores, not closing them. And we're helping you reduce SKUs in total by 11%, slow moving SKUs by 14%. Basically, across the board, reducing the amount of excess that is being locked up on your shelves. We've got a lot of customers who have had really great results. You can reach out to and talk to any of these. Almost all of them are major advocates for our platform and even will help preach our word to people at events for us without us even asking. So we've got a lot of evangelists out there, people who have used our platform like Alyson, who's going to tell you a little bit more about why they love using it. Reach out to these cats and ask them yourselves how they like using Happy Buyers. We integrate with some of the best POSs out there. So if you're on Dutchy, Blaze, FlowHub, or Trees, you can work on Happy Buyers. Good news. And if you want to give it a shot and not take our word for it, but actually run it yourself, we'll give you a 14-day free trial with live store inventory data. You can actually start saving the money that you'll use to spend on our platform, probably at orders of magnitude within 14 days for free. So you can put on as many people as you want, play with it, make some ordering decisions in that 14 days, all for free. And we'll also provide you a free inventory audit, whether you take the free trial or not. But this is just part of our free trial. It gives us a really great benchmark to say, here's where you're at, here's where the damage is, and here's what we can help you save in money right away by using our tool the right way. So if you want to check it out, if you want to sign up for a free inventory audit, if you want to jump into a free trial, it's all super easy to find on our website. Just go check it out. Sign up for us. We'll be happy to talk you through all of this stuff. So, yes, now I am pleased to kick it over to Andrew so he can have his interview with Alyson. But before I do, just a little bit about how this is going to be structured. The last 15 minutes of this webinar, we're going to open up to Q&A. You can ask questions at any point in time during it. However, use the little Q&A tool down below in your toolbar in Zoom. It's got the little question mark. And you can submit questions at any point in time. Also, feel free to do that in the chat as well. If it's easier for you to use the chat, that's cool. I'll be in the chat playing around, talking with y'all. Let's keep it lively. If you disagree with anything anyone's saying, feel free to disagree in the chat. We'll be happy to take it up live. So yeah, without further ado, I'm going to kick it over to you guys.
Awesome. Hey, Alyson, how's it going?
Great. Great.
So I just want to kick it off. Always great to just give a little bit tell me about yourself, right? Tell me about your background. I know you had a chance to use Happy Buyers with a few locations. Like, just would love to skip like the quick high level.
Yeah, so Brad mentioned this, but I spent 15 years in big corporate retail in the buying offices, mostly at Target, Nordstrom, and Chico's. So I learned all this super formalized best practice approach to merchandise planning. Merchandise planning is the science of retail. So, retail is a blend of art and science. The planning is obviously the science part of it. Then, 10 years ago, I threw caution to the wind and left corporate America and started a consulting business in cannabis. I had a client early on, and through that client, it just built it just built on itself. So through the course of the last decade, I probably worked with 50 dispensaries, and they're all range in size from 60,000 a month up to 2 million a month. And the clients that I have had really have come from two buckets. So the first bucket is they need a fixer. Cash flow isn't where it needs to be. They need to get stabilized and they need disciplined inventory management processes in place. So that's, everything from the assortment mix, buying process, pricing and promotion, all of it. The second group, this is becoming a bigger group. These are people that are in the average range, but they're purchasing assets, and the assets they're purchasing, the dispensaries, are usually distressed. So they want me to evaluate that investment, give them the real story, outside of the P&L, what's good, what's bad, what's fixable, and then implement a discipline, process so they can absorb the stores that they're bringing in. That's the background. You're probably gonna,
And
yeah, go ahead.
well, I would say like I know with us like we started working together because you recently used Happy Buyers at a multi-location chain in a couple states I think they covered. Just talk to me a little bit. I think it's really exciting, just like some of the results that you saw that you were able to drive
Right.
just using the tool for a bit.
So the first thing that I would say is that I would say a lot, maybe not the majority, but a lot of operators are using some combination of spreadsheets, POS reporting, and headset. So that's not, it doesn't, it's not the best method. So I had like an example. I had a client, the most recent client that I had, they had 7 stores. And when I hit the scene, this is pretty typical. Like what I see is the stores were way over inventoried in total, but it was very lumpy. So some stores had 5 months of supply, some stores were running on fumes, missing sales. So I used my own analytics for a lot of this, but the buying part of it, Happy Buyers has a far superior tool to anything I could create. So there were 3 major things that I did, and I did this really within 45 days using Happy Buyers. I reduced their monthly spend by about $200,000 a month. I reduced the age inventory by $220,000 a month, and that was all in third-party product. And then I increased the gross profit percent by 4%.
Wow.
And and what I want to say is I feel like every operator, I don't care like how big you are, has got to be using this tool for a couple different reasons. Number one, obviously there's a live inventory feed, but then number two, and perhaps most importantly, is that Happy Buyers calculates an accurate run rate. And this is not, you cannot say the same for the other ancillary tools. So what I mean by that is, let's say you sell 30 units in a month. So that would be 1 unit a day. So happy buyers will go through and say, okay, but the item was only in stock for 15 days of the 30. So the run rate's actually 2 units a day. So it's really important when you're calculating buys that you have an accurate run rate.
Yeah. I think that in particular is one of those like first key things when we're attacking this problem. Like people don't really fully realize like it's not just like on average how much you sold of this thing in the last 30 days. If the thing literally wasn't on the shelf for half that time, like you're not gonna have the correct run rate 100%. So I want to go back and let's do this where like I think each one of those ROI points you hit on were really compelling, right? The idea of like reducing monthly spend by over 200,000, reducing the age inventory, increasing the gross profit. So I want to start at the on the spend side, right? And I think to your point, a lot of folks are used to using an agglomeration of POS downloads and headset stuff and other like reporting things. Can you kind of, and I think what you did is a really, really insightful about how you kind of built some like really unique use cases on top of Happy Buyers, some of it being supplemented by some additional analysis work that you were doing it, some of it being dedicated to the tool. What I want to do is let's talk explicitly about like that reducing spend to start with, and like how did you go about like tactically doing that, right? Using the tool set.
Yeah, good question. Okay, so you cannot avoid downloading information out of the point of sale to get at data, to get at the storyline that they are not giving you. So when I use Happy Buyers, I take a step before I even go into Happy Buyers and look at the SKU groups. The first thing I do is evaluate what is the overall inventory level at a category and brand level. So what I mean by that, and I'm going to show you some spreadsheets here, and every single thing that I'm showing you, I can provide you. I've set them up so they can be run in dumps. Like I have these in my like data visualizations, but we can do this in Excel. So the first thing that I do is I pull in the last 30 days worth of sales, and then I compare that to the current retail value of the inventory on hand. So it's incredibly important that you are looking at retail and not cost. A lot of people buy to units and to cost, and that completely masks the true value of what you've got there on hand. So a way to say this is if you, let's say you buy $100,000 worth of product at cost, you have a 50% markup. So now you have $200,000 at retail. So what that means is if you took no markdowns, the most you could sell at retail would be $200,000. So if you're looking at cost or units, not all costs and all units are the same. A $10 cartridge is not the same as a $25 cartridge. So that's the retail concept right now, is comparing sales to inventory. Now, do you mind if I share my screen?
Yeah. Go ahead. Go ahead.
Okay.
While you're bringing that up, one thing I think folks ask is when you're comparing the retail sales to the inventory, when you're doing that first base level check, what ratio are you normally looking at for
Okay.
last 30 days? Yeah.
Okay, good question. Okay, so what we're going to do is I look at, just to make it super simple, this is like, we're talking simple. I pull in the last 30 days sales. I compare it to, let me just show you. Why don't I just give you a visual here? Um, let's see. Okay. Um,
Perfect. We can see it. Yeah.
Okay. All right. So this right here, this retail value of inventory in trees will give you this value. It's called estimated gross income, I think is what they call it. In Dutchy, unfortunately, they do not give you the retail value of the inventory. You have to multiply the units by the unit retail price. Okay. So I have a template that'll pull this in for you. It'll just be dumps. So you'll run your valuation report in trees, and then you run your current inventory in Dutchy. Okay. So don't worry about the mechanics behind this. I will give that to you if you want it. But here's step number one that I take before I even go into happy buyers and look at the SKU groups. I pull it in at a category level so that I can see how many weeks of supply each category has. So in this example here in 510, so I want these people to be at 4 weeks of supply. All right. They're slightly above the target here. But the issue is that you can see that these brands are below the target. These are over inventory. So if I were to go into happy buyers and not do any of this, it would put things in the cart that I don't necessarily need. So what I mean by that is, this might be a better example here. You have here, we have nearly 2 months of supply. So I want to work through this inventory before I start bringing in more inventory on top of it. So now when I go into happy buyers, if I buy anything at all in disposables, I'm only going to buy the top selling items in these brands. And I'm going to wait. I'm going to get the top sellers back in, and then I'm going to focus the team in on moving through this inventory here. So here's an example, bulk flour. So they are under inventory in all areas. Like they are at 2.5 weeks of supply. We want to be at 4. So here I would definitely go in and buy whatever Happy Buyers is telling me in Glorious Cannabis and Grown Rouge. I would use the SKU groups there.
Awesome. No, that's really, really helpful. And then, so what you're doing from there then is like that gives you that context of what then when you're going into happy buyers and you're actually like, hey, this is the SKU groups that I know I want to target. You're using that to make sure that you're targeting so that you're controlling for the net overall supply within that.
Exactly. And
Yeah.
that is the quickest way to reduce your buys, is that little thing, taking that little step beforehand so that when you're going into happy buyers, truly you are only buying what that category needs.
Got it. And that together with making sure the buy is on the correct side in happy buyers, and that also you're having this health assessment. It's really kind of like a basic health assessment. You're saying together, you can reduce the overall inventory spend across, a 7 location chain, $200,000, right? A month, which is significant amount of money, right? Like that's,
Yeah.
2.4 million a year.
I mean, that's basically how I did it. I started out with my I have a model where I pull it in, but this Excel thing. So I review by brand by category, and then I only buy into the brands in the category that needs it.
Got it. And so talk to me now about the aged inventory side of it.
Okay.
So that was literally just getting the buys tighter, buys smaller, the buys more controlled. Now let's talk about the aged inventory where you have potentially, hundreds of thousands of dollars. Sometimes we brought someone on recently who had $1 million plus like 1.5 million dollars of aged inventory. Like sometimes that can be such a large number and folks don't know where to start with that. I'm really interested, yeah, in
Right.
kind of like your perspective and how to use both like happy buyers, but also just like the concepts of like what people need to be thinking of in order to attack a problem like that.
Okay. So aged inventory is a major, major problem. And the reason why is that in retail, the single biggest investment any retailer makes is their inventory. And I'm using the word investment because that's exactly what it is. You don't get a
Hmm.
return on it until you get your money back out. So there are two metrics in all of retail that they reign supreme, and one of them is inventory turnover. So I just want to touch on this here for a second. The concept of inventory turnover is basically how many times a year are you completely replacing your inventory. So a good rule of thumb in cannabis is 12 times. So the inverse of that is 1 month of supply. So you are in a healthy situation if you are replacing your inventory. So here's what I mean by that. Example. Let's say you buy, just to keep math super simple, let's say you buy something for $10 and you mark it up to $20. That's a 2 times markup or 50%. Now, let's pretend in this fantasy world there are no markdowns. So you sold the item for $20. When you sell the item, you take $10 of that and you rebuy that inventory again and repeat the process. And then you take $10 and you put it in your bank account. So inventory turnover is your ability to perform that as quickly as possible. So if you are an operator that is anywhere near in the low 40s or flirting with a 30 in the 30s margin, the only way you're going to survive is by turning over your inventory faster. Now you can turn it too fast, which means you're rolling on weeks of supply that are way too low and you're missing sales. So that I want to just get that out there. So I'm going to go through here, and this is how I cleaned up the aged inventory, like keeping that in mind. Like in my mind, I'm trying to, when you have less aged inventory, you turn it faster because you have less dollars sitting there in your inventory investment. Okay, so the first thing that I do here is if you go into Happy Buyers on the homepage, there is a thing here. I use overstocked over 30 days. So basically, what this is showing you is everything that they are projecting is going to take longer than 30 days to sell. So this in here, now the only caveat here is there may be items on here that are brand new and they have not had time yet to get a good run rate under them. So just know that, keep that caveat. So you're going to download that. You're going to download it into Excel right here, export CSV. Now I'm going to go into here. And okay, so this is what the dump looks like when you bring it in here. All right. Now, I am not sure of where everybody's at here. So I'm going to kind of take this back to square one. I'm going to show you how to do a pivot table. And for anybody here that has never used a pivot table, I'm about ready to change your life. We're gonna be 50 years into it. You're gonna remember this webinar and be like, that lady changed my life. Okay, so the first thing that I do is one thing that Happy Buyers does that I do differently is they consider aged inventory anything over 60 days. I can consider aged inventory over 30 days because I want my stores turning 12 times a year. I want them at 1 month of supply or less. So the first thing I do is I go in here and I insert a couple columns so that I'm adding up all the units here that are greater than 30 days. This is this is really what I do to try and get rid of, work through the aged inventory faster. Then I have the age cost, which is just going to be those units multiplied by the unit cost of the item here. Okay, so once you do that, now you're going to turn it into a pivot table to see what's what. So to create a pivot table, the first thing that you need to know is every single column that you are selecting, it must have a title. If it does not have a title, it's not going to read it. So you're going to select the data that you want to pull in there. So this is, I want all this data. You're going to go up here to insert pivot table from the range. Okay, and then you're just going to say okay, and you're going to pull it into the spreadsheet. So once you pull it in here, this is what it looks like. Okay, so here are here is the actual pivot table. So on the left, the rows, that's going to be the qualitative information. And the right here is going to be the quantitative information. So see, I have pulled in these two metrics here. So you slide them down like this. So I've pulled in these two metrics that I just called out. I want to look at everything over 30 days. So then once you get it in here, you want to see like, okay, who's who in the zoo? Where do I need to focus my energy first? So if you right click here, you can sort all of this high to low. That's where I want to do, because what you want to do is you want to focus in first on where the biggest problems are. So in this situation here, we have Platinum Vape. They are over inventory by 90 at cost. They have about $9,900 or 2,500 units. So then the next thing I do to get to move through this inventory, in any aged inventory situation, you need to go through like a process. Step one, you need to ensure the product is actually out on the floor. Step two, you need to try an RTV for credit if you can. Step three is engage the bud tenders. So let's say you have an item for $50 and you're going to take a 25, you think you need to take 25% off to get it gone. That's a $12.50 markdown that you're giving away to the customer. So why not pay your bud tenders $5 a unit to get it out of there? Step three is strategic markdowns. So once you have this high level view here, so you kind of know what's up, then what I do is I will pull in, like in this case, I want to do it by vendor, but I'll show you, you could do it by category too. But so if I pull in the category name here, now I can see like which items are the ones that have the most units on hand that are aged. Now, again, if we go down here and we right click and go to sort, largest to small, I want to see where my biggest problem areas are. Now, if I'm going to do strategic markdowns, the next thing I want to do here is I'm going to pull in the unit price in here so that I can begin to bucket up these items and see if there are bundle deals that I can run, if there's like a 2 for 20 or whatever. Or so here's the retail price. So you can see where you're starting at, and then you can start to bucket up your promotions. The other thing that you could do is you could look at the category and then the brand to see, okay, we don't want to look at accessories because that's its own little thing, not baked goods. Let's look at carts here. So now we have the category. So now we can see, okay, within distillate cartridges, here's my problem. This Breeze Canna is the problem. So you could lump this up into brands and then items, categories and then brands, whatever. But I use this to identify what I need to send back, what I want to promote, what I want to get the bud tenders involved in.
And so to that point, I love the concept here of like the tactics of moving the age inventory there. If you're talking about like that Breeze Canna example or those distillate cart examples on the bundling, can you just talk me through a little? I want to double click there a little bit. Like talk me through a little bit of like how would you think of forming a bundle in that
Okay.
instance?
Okay. Markdowns, promotions, all of that is a way, way bigger conversation than this. But I will say this. I'm going to leave you with a couple tips and tricks. Number one, do not see my arms like this. Do not take a percentage off. Do not take a percentage off. It is tired, it is boring, it is ineffective, and it's wasteful. It's a wasteful way to spend your markdown dollars. So instead, let me pull the name in here. So let's say that in cartridges, the better thing to do in this is to price point or to bundle. So what I mean by price pointing is this was 50 and now it's 40. And when you do it, you need to ensure they see the original price and then literally like a marked out price, and here is 40. So that's how I bucket it up. And then I do bundles. Like I'll bundle if I have a bunch of cartridges that are all at original retail around $25 and I got to get them out, I will bundle those together and say, okay, two for 40.
Got it. And then tactically, when you're talking about the $220,000 age inventory reduction, what would you say if someone's starting from like square zero, which is where we
Yep.
find a lot, and they're just coming into an awareness of this being a problem? Which tactic do you normally advise people start at? Like
Okay.
what you put as the highest priority?
Highest priority is make sure the item's actually on the floor. Because sometimes
Yes.
it's like out back there and you don't know it until you see it. So that's like
Yeah.
number one. Number two would be to see if you can return to vendor anything and get a credit for product that will sell. That's the next. Then the next thing is work with your bud tenders. What can you do? Like you can use spark plug, whatever. Like I'd rather pay them the markdown dollars as opposed to the customer. And then the last option are these strategic markdowns.
Where you eat it essentially yourself.
Mhm.
Yeah. And I think
Yep.
that that's really good. I will say on the make sure it's on the shelf, that's something that we've seen a lot more, and we have some in the happy buyers inventory room settings. You can sort of
Yep.
set your front of house and your back of house, and you can use that. Can't tell you how many times, like when you look at it and it's just like, oh, like, this is $30,000 a day because like it just hasn't been moved into an active
Yep.
sellable inventory location. So yeah, so
It's a
100%.
lot. It's a lot of SKUs, it's stores, it's all the things. Oh,
Mhm.
PS, I forgot. If you are a multi-store operator, I totally forgot. Like it would be good. You could use this by store and figure out how you want to transfer. I
Yeah, the
totally buried
transfer.
the lead on that one. Sorry.
Yeah, that's a really big one, and that's a lot more transfer multi-store allocation use cases are a lot of stuff that we've seen also folks rolling out, and we're actually working on some additional stuff there to help with the cart allocation stuff when they're doing the buys. Um, while we're on here, and I just want to one last question on the age inventory side. Oftentimes we'll hear, throwing you for a wild card in this one. Oftentimes we'll hear that like, hey, part of the reason why we have a lot of aged inventory is because we had to do a bigger buy to
Oh
get
yeah.
better terms from the distributor, right? And it was only by doing that, and so that's why we have, X, Y, and Z. What's your opinion and what's your take on that?
Okay, I'm really glad you asked because the other thing that I hear a lot in addition to that is, okay, we're going to overbuy so that we don't have to pay for shipping. So it's like you got to ask yourself, is saving $150 worth over investing by $3,000 and having it take 3 extra weeks for you to get your money back out so that you can pay your bills? So you have to do that. Back your original question, what kind of ties into what I showed you initially, the sales versus inventory. So if you are overbuying to get better discounting, then at an overall category, you know that you're overstocked. So you're going to have to work through that inventory that you overbought on before you begin to bring more inventory on top of it.
Yeah,
The way it
yeah.
works.
Essentially, it's like, is the juice worth the squeeze?
Well,
Right.
yeah, and really
Mhm.
what you have to just decide is do you have the money? Do you have the ability to lock up your money for weeks longer? Is that the trade-off?
Yeah. Because ultimately the buy is capital, right? To your point, inventory is an investment. Like it's not just units of goods on the shelf, it is literally dollar bills. It's dollars and cents that are owed, or literal dollars and cents that like are sitting if you're buying COD, right? That are owed to somebody else.
Right.
And so are you willing to lock up more capital in the investment in order to do that? I also think it's important to note that like price volatility, wholesale price volatility is massive, right? Just because you need to buy more now to get a better margin, like the brand, that's beneficial to the brand because they know that they're going to have to go down to that price anyway because of price competition, right? And so if you're doing that, but you're still locked in at a price that's higher than what the market's at because you bought for 3 months and the price has fallen, right? That kind of stuff. So, and this also tees up really well, kind of going into kind of like this third big pillar right, of ROI, which I'll say this is probably the hardest one for folks to rationalize how just like getting better at buying translates to margin accretion, like just like that direct line, they kind of normally that sets more of like kind of like at an executive thinking level. But you're talking about you're able to increase gross profit by 4%. Talk to me about the use cases around the gross profit side.
Yeah. Okay, so gross profit in the end is what we care about because that's the money that you have available to pay for all of your expenses. So it is supremely important how you get a better gross profit. You tighten up your merchandise assortment into things that are higher, have a faster velocity so you can get in and out of them faster. And you get out of vendors that have lower margins and get back into vendors that have higher margins. So this is going to be my favorite part of the conversation, and I hope this is going to be the most impactful part. So I'm going to tell you what I do here. So the first thing is, the first thing that I want to discuss here is that when you're looking at your gross margin here, your gross margin, this is what is going to, I think, really help. And this is a tool that I will share with you so you can play around with it. But your gross margin is the combination of your initial markup and your markdown rate. So that's the first thing that you need to really consider here. So in this example here, we are at a 50% markup or at 2 times. Okay, so if we pay $10, we mark it up to 20, no markdowns, we have a $10 gross profit. So we took $10 reinvested, and this is the money that goes in your bank account. So a lot of people that I work with, they start out at 50%. So the minute you take a markdown, let's say you take a 25% markdown, now your gross profit went down by $5 because you gave away that $5 in markdown. So the most important thing that you can do in all of this is we all know that you have to mark things down. That's just the environment that we are in. So the most important thing that you can do is push as hard as you can to get these higher initial markups. So look what happens. If I change this to 60% at 2.5, now my gross profit went up $3.75. So now you have, when you have a higher initial markup, you have room to take these markdowns. When you start out at 50, now look like you're at 33%, like you're never ever going to get out of this spiral if you do not push to get higher markups. So now I'm going to go here into happy buyers. Now, if you go to the inventory health tab and then brands, all right, you can, on your actions here, you can customize your table and move things around here so that you can see like what's what. So what I do is I get the brands in here just for a high level. Like let's see what's going down. So in this example, we're looking at the last 30 days. This is the biggest brand right here. This because I've sorted it by sales high to low. But if you look over here, look at the margin. Look how low it is compared to everybody else. So when you see this, so this is your high level view of what is going on. So now when you see this, you need to understand, why is this so low? Is it because I didn't have high enough markups, or is it because my markdowns were too big? So this here is, I hope everybody asks me for this because this is very, 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 very important. So again, this will be like a run and dump. So this would be like the template I'll give you here. And then this, we're going to pull this into the pivot table. So the pivot table here is, this is kind of a little bit advanced. Let me just show you what this looks like before. So when you come in here, this is like, you're going to get these are your sales here. To make it super simple so you understand like what's what, the first thing I do is I convert this. I change this to a percent. So I can see the percent to the total here. So the simplest exercise you can go through is you select whatever time period you want to look at, and you want to see, like I said, who's who in the zoo. So Glorious Cannabis here is 23% of the overall sales, but only 18% of the gross profit. So this is a problem when this is the number one brand that is not returning the same percentage of gross profit. So anything you do here in this brand is going to impact the entire store. So then the next thing I'm doing here is I'm breaking up the gross profit of 33.4%. I'm breaking it up into the initial markup and the markdown rate so I can see what the problem is. So the problem is the markdowns are way too high. So what I would do in this situation, like I'm good with the initial markups at 61.4, but here, this is extreme. And if this is what it takes to get this vendor selling, do I want to continue to carry it? So I probably do because this is the number one vendor. So what I would do is go back to this vendor and ask for support. Like this is how I would manage that. So here's another example, Jeter. This is always the way that it is, but of course they're returning way less margin than the sales. But we all in their situation, it's because the initial markup is only 40%. They're not even getting to 2 times here, and they have to do that in this brand. Sometimes you're going to have these brands where you're just not going to get there with your margin, but you have to have it as part of the mix because people want it, and that's the beauty of retail is you can offset that with other brands. But in this example here, markdowns are great. It's the initial markup. But will these people work with you? Probably not. So this is one you're just going to have to deal with it. So then, of course, once you get in here, the other thing you can do is what I like to do is I like to look at it by category. So in 510s is pretty profitable. See, they're returning way more gross profit than they are sales. Why is that happening? It's this brand like Drip. That's the number one brand and it's almost 50% of the business. So that's why it's happening. So you can go through all these different things and kind of figure out what's happening. Then you create a vendor report card and you go back to your vendor and you say, look, you are, like in this example, look, you are the biggest. Sorry, let me bring the brand. This is actually good I'm doing this so you can see how I do this. Like, look here, Glorious, you're our biggest brand, but you are not returning the margin that we need. Or conversely, like, hey, you're the number 4 biggest brand. We want you to be number 1. This is how you compare to your peers.
And you're saying you give the vendor this level of visibility,
I
the
do, but
inventory health visibility. Yeah.
I do, but you want to delete it. You want to like massage this and like maybe blank out some of these brands because you don't want them to know like
Yeah,
what.
yeah. So they could get, yeah, exactly.
The
Yeah.
other thing too is you will notice within these brands, like it could be a situation where let's try and find a brand that like Trap House here. Like it could be a situation here where they have multiple categories. And this is another way I increase the gross margin is I will go in here by brand and look by category. And maybe it's just like one category they carry that has low margins. So unless it's necessary, I will get rid of that category and that brand and funnel my money into brands in that category that have higher margins. So it's just a process of number one, step one is you got to figure out, is it the initial markup that's the problem or the markdown rate? Then that informs you on what action you need to take next.
And what do you take from folks who are kind of like, well, I'm okay with whatever markdown as long as the brand covers it or as long as the brand matches
Okay,
it?
that, and I'm actually fine with that, but you need to make sure that you have a good process in place where you're actually following up to ensure that you're getting the credits at the end of the month. That
Yeah,
process can be a little spotty. But yeah, it's like if the brand is going to support it, that's great.
yeah. I would also
That's what you want.
Yeah, and I would also say like then cross-referencing it to like what you were showing earlier, which is just because they're going to support it doesn't mean that you then quadruple the buy or
Oh
something
yeah,
and they want more weeks of supply.
that is a very, very, very good call out because you do not want to be buying back into promotional activity. So know in your run rate. So Happy Buyers is going to scoop that up and say, okay, you were selling 1 and now you're selling 10. And so you as the buyer have to remember, okay, we had a promotion. And you can change when you go in here, like if you know you had, let's say, I'm going to go back in here really quick. Let's say you know you had a promotion going on, let's just look at Jeter here. You can change this look back period to try and get that out of there so that it's not in capturing that. Or you make the look back period longer so that it tamps that down a little bit. You have to remember that. That is such a good point, Andrew. You do not want to buy back promotional volume.
Yeah, 100%. Well, we're just reaching the time here on the Q&A. I do want to say this was fantastic. I love getting into like these more like practical advanced use cases around like how to use the tool in conjunction with like existing processes and existing like problems, and then the real ROI of like how like objectively, I mean, that was, 30 minutes of just showing how to do a few tasks that resulted in hundreds of thousands of dollars of back in the bank account, right? And so, that's
Yeah.
pretty good time to value of money, I'll say.
Well,
Um,
plus I mean, Brad, you touched on this a little bit in the beginning, but this, like in what I do in merchandise planning, buying is only one part of it, one
yeah,
part. And this has reduced the time. I mean, hours and hours a week. It's significantly reduced the time that I have to pay attention to that because I know I trust what you're serving up once I get things filtered down. So
yeah,
that's a big
100%.
thing too.
Yeah, the time savings, the time, and then to your point, like, it's not the whole thing. Like, the point is you're supposed to be spending most of your time on the merchandise planning,
Yeah.
on the actual strategic stuff. When you're spending all of your thinking and power on the hours it takes to translate and the information into buying, like, then there is no time spent on the strategic merchandise planning. Or in order to spend time on strategic merchandise planning, you're doing the quick, easy, not really thinking through too much on the buying side so that you can do that, which is resulting in the age inventory problems and the
Mhm.
overspending and stuff. So 100%. It's really awesome. Before we jump fully into the Q&A, just any last thoughts? I know you mentioned a few times. We'll make sure that folks have access to the templates. I know there was a
Yeah.
question someone was asking for that that you're leveraging, but any last remaining thoughts just for the audience?
I don't think so. I feel like I sort of talked a lot, but I want you to know just like what I'm showing you here, like you're not the spreadsheets that I showed you are not anything that you can get out of a point of sale, but it's helping you see the story so that you know how to make better decisions. So it's not anything fancy, but I'm happy to share it with you. And in all these instances, no matter what your point of sale is, you can run and dump into the template page and it'll pull into those pivot tables.
And we love seeing more and more of the use cases that folks are developing around pivot tables, around spreadsheets on top of the data, because that's also like what helps inform our long-term product roadmap. It's literally like, oh, if that's what we're doing, like how can we make that even faster, simpler, easier, more effective in the software itself? So it's awesome.
I
Okay,
love that
let's hit these.
when I was promoting this webinar, I called it a masterclass because often as a marketer, like I wonder if like am I overhyping something? You know what I mean? Like, am I telling the truth? That was a masterclass, Allison. Thank you so much
Oh,
for
cool.
sharing.
Yeah,
We got a lot of good questions in, so I'm going
there's
to
a
go
lot of,
through a
yeah.
few of them. Thank you everybody for adding your questions, and if you have any more, if we have time to get to them, please keep asking them. What are some of the other suggested tools or softwares that we can use in a system flow to best utilize the tools given through Happy Buyers? Like we have this and POS. What else do we need?
Me?
Yeah, that's true.
I don't,
What's your tech stack
I,
essentially,
I mean,
as a buyer?
honestly, I design, I have all my analytics in Power BI. So I pull everything in there so that I can visualize it mostly for me, so that I can see what the storyline is efficiently and then provide recommendations.
Right.
But honestly, Happy Buyers is, I don't really use anything else other than Happy Buyers and the point of sale, like the data that's in the point of sale.
Right on. Yeah, I know we do have some other buyers who also utilize headset to some extent. So there may be some use for other buyers and other things
Yeah.
they're looking for there. Um, how do we use this when planning for upcoming holidays?
Okay. That's a really, we could have a whole nother thing on promotional planning, but depend, you know, depending on what your promotions are, like it's ideal if you can get it planned out. So you need to take a look at, like, let's say that you're gonna do a promotion on 1 gram disposables in the brand Vape and Ape. So if you go into Happy Buyers, you can see what is the run rate, like what's the daily rate of sale. Then in your mind, if especially if you have data to look at from the past, you got to figure out what's the lift. What do I think the lift in those units is going to be? And then that's what you're gonna buy into. So, when you load the items into your cart, you can increase those units. And then of course, you're going to ask the vendor for support.
Right on. How can I use this information in contrast to offers from brands for matching discounts or credits to be applied to future orders on sales?
Okay, can you ask the question again? I want to make
Yeah,
sure.
no worries. As I was reading it, I was like, am I grasping this? How can I use this information in contrast to offers from brands for matching discounts or credits to be applied to future orders and on sales?
Um, I'm not totally sure. I think I understand. I think the question is this. So what I have showed you is basically a form of a vendor report card. That's basically what it is. So that data is based on however 30 days, six, whatever it is that you want to look at. So this is showing you what is the day in and day out markdown rate. I think that's what they're asking. And then,
Yeah, they just clarified in the chat, meaning how do we work with vendors and their offer for credits toward product? Love the
okay,
report card concept.
Like follow up. I think it's like showing them. I mean, I think it's what you were talking about in terms of like the markup and markdown. It's like,
That's right.
yeah,
hey, like, maybe this is a brand that we believe if we could get a markdown, we would get actually on net better profit from and better sales velocity from. But like this other brand is covering this huge markdown. So like it's not that. It's like showing that one brand, be like, hey man, if you help cover like part of this markdown, then overall I can replace you as one of the top slots and
yes.
top brands, and on net you'll make more profit because their initial markup is also better on all of
Yeah.
that and kind of give you that breathing room essentially.
Yeah,
That's what I
or yeah, that's exactly, or within a category, you can look at your top brand and see, okay, what is the markdown rate in that brand currently? Like what makes it the top brand? So then you go back to your other brand, you're like, okay, we need blank amount more markdowns to try and get you up to number one. Will you support it?
Yeah, 100%. And I think they're playing that. I mean, it's a little bit of FOMO. It's playing them off each other, right? It's playing a little bit of those
Absolutely it
incentives.
is. Absolutely. But listen, you can't go in there and be like, hey, I really need better price. You got to go in there with data and show them like how they compare to their peers.
Yeah. How they compare to your peers at your stores, I think is also really
Yeah.
important because how your store on the corner is performing is not the way that like every store in that market is performing.
Mhm.
And it's retail, location, 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 location
Yeah.
matters. And so like they're gonna come in with their opinion. And if you are like, no, like I get that, but that's a store in a zip code, 2 zip codes over, or data from play, that has nothing to do with like where I am right now. I think that's why the data is so helpful at that precise level.
Yeah.
I love the discussion this question is caused because it's a theme that comes up in a lot of our conversations with some of our best buyers, which is the sharing of data, like being transparent with some level of what you're willing to show them so that you can not just be transparent, but use that data, which is yours, like that's your most valuable thing. Use it as a leverage tool. Right. And if they're coming at you with credits or offers for branding or expecting you to do any discounts, whatever that might look like, you can use that data to navigate through that negotiation rather than it having to be a game of poker, you know?
I always blank out, like, I will blank out the names of the vendors
Yeah,
around the vendor that I'm meeting with. That's just for me. I like
right.
to keep that private.
Yeah. Yeah, I mean, we haven't talked to a buyer yet that wants to show everyone everything. You know what I mean?
Yeah,
Yeah, don't show everyone everything.
Yeah.
But
but
show them explicitly where they sit within the
yeah,
within the
Yeah, use
report
the data
card,
to
I
your
think is yeah.
advantage, right? Like show
Yeah.
them exactly what you need to show them to be able to leverage it best, right? This question came in and it's very specific, so I want to get to it first. You showed us the report and happy buyers, export, and pivot table for the aging inventory, but the first time you shared your screen, you looked at a spreadsheet you used to see where the par levels were per category and used that to decide how many units to buy from each brand. As far as I could see, you didn't show where you pulled that data from happy buyers. Would you mind circling back to that?
absolutely. So that was a dump from the POS. Actually, I don't think I did. Yeah. Wait, that was
Yeah, that was a total. You were looking at a total. It was total sales, I think, straight out of the POS. I
yeah.
believe the
This
same. Yeah,
this is out of happy buyers right here. So this is how I create the aged inventory pivot right here.
yeah,
The only thing I'm using as a sales dump is this sales versus margin. And this is just like a dump from right. This is the sales report in Dutchy, and this is in Trees. When you go into reports, you have like sales and inventory.
yeah,
It's
yeah,
the sales report. So that's what
yeah.
this one is. But aged inventory out of happy buyers, that did this, the sales versus and the sales versus inventory. Oh, no, I'm sorry.
This is based
I'm
on the
totally
POS though.
getting, so this one
Yeah,
right
yeah,
here is going to be a template. This comes out of your POS. This is a template because we have inventory and sales. So I will
yeah,
share this with you, and the template is literally going to look like this. Like you're just going to paste your data wherever I'm telling you to paste it, and it'll pull into that pivot table for you.
yeah.
So
And
yeah, sorry about that. Yeah.
no worry. I believe you can get the same level dump out of the brand's view and inventory health and happy buyers, but
Oh, oh,
what we don't have is I mean, it's either one, right? Right. But I think what we don't have is the retail value of inventory, which you would have to calculate by dividing the sales by the units sold times the units on hand, essentially, to get your retail value of inventory metric, which
yeah.
I think is great. I think like
Well,
from a super tops down high level, just like how are we doing on like the amount of money we make versus the amount of inventory we have is like a very like direct way to get at like, do we have enough? Objectively, do we have enough?
yeah.
Yeah,
And just side note, I don't know why, but Dutchy, like in their current inventory, they don't have the retail value. You have to calculate it. So you're, like
yeah,
you said, your units times your retail value is the value of your retail inventory.
yeah, yeah. I
But
think yeah, I think, and like, I'm thinking there's a couple places in Happy Buyers you can get a similar set of information, but I think the important concept is like just looking at what is the retail value of what you have on a brand basis, on a category basis, on a store basis versus how much in sales do you make,
yep,
right?
exactly. And then
That's
just
like
divide it. You just divide it, the
divide it. Yeah,
inventory by the sales.
yeah.
Yeah.
This question is more for Andrew. Does the software offer price suggestions to help move old inventory? It would help me set my sales prices.
Not yet. Not yet. That goes back to the pricing promotional planning aspects of this, which is a whole basket of things, a whole new set of webinars that we should probably do one day.
Mhm.
But not yet. But I know Alyson, you definitely have experience with like then the actual like price adjustment stuff eventually.
Yeah.
Yeah.
Allison, how do you use this to evaluate potential new products to bring on?
Good question. So I use that. Okay, that's a really good question. Let's say you're thinking about bringing on a new cartridge vendor. So you're going to pull this in here and fit everything, it just simplify it. You're going to pull it in here and see, okay, where is your, like in this thing that I showed you right here, back to the, hold on a second, back to this here. Let's do by category first. So in here, like, okay, let's say 5/10. Let's say that's what you're going to bring in here. Okay, who is my top vendor here? Drip and Crude Boy. Then I would pull in the products underneath it and be like, okay, what is the price point of these products? Or what is the weight of these products that are doing so well? I would start there. And then obviously you want to bring in new products to replace products where you don't have the margin that you need. So that's why I would start. Start with your current data, figure out what is and what isn't working, or where you have holes in price points within the categories. Yeah.
Yeah, I would say that starting with your current data there, one other cause of why we see folks having their aged inventory creep up and their buy sizing creep up is chasing after like constantly going back to like I'm gonna bring on the brand that's like up on some like best selling in the market list. But when you're constantly doing that without cutting the brands that like on the bottom, you've effectively just created this
Yep.
giant. And so now you have like 20 brands that sit in your 510 thread, right? Like set, because you're always kind of going to what the market says is the best selling. And that's
Yeah.
why I think it's like if you're looking at your own data and then thinking, how does it fit in? And what brand, like what is the gross profit percentage, the markdown percentage, like the markup? I think that that's like the context that you really have to have coming into it. So anyway, I know we're 1 minute over. Brad's putting down the curtains, right? Turning up the lights. So
Turn the lights up.
A little bit, a little bit. We do have a couple more questions, and they may be real quick hits. I'm just going to ask Andrew this question real quick. Does the software offer par level reporting that will allow me to look at anything under, say, 14 days of inventory, but the data is based on rolling sales or a preset number I provide?
yeah, yes. In the all products view, you can do a lot of filtering, and on our home screen, we have a ton of filtering that you can apply on just like days of par level days of supply to cut down on that. And if you have any questions, can follow up and show that. But yeah,
Rock and
filters. There's filters for days.
And Allison, do you see high CBD, low THC products moving in over from hemp into the regulated market in this next year to capture that clientele or market? What's your read on that?
I don't have a read on that, to be
Yeah.
honest with you. I don't. I don't.
Yeah.
But everybody make sure you have sleep gummies. That's all I mean, they're always at the top.
There's plenty of that moving in. Yeah, totally. Yeah. And I'm seeing a lot of like, the blended, cannabinoids, CBG, CBC, CBD showing up in things more on the edible side. But
Yeah, I think
cool.
it's going to be really, really interesting. So I don't have a read because I don't really know what is going to
Yeah.
happen.
Moving in from hemp to the regulated side, yeah, that's I
Yeah,
don't know how much that's actually happening, but we'll see. It's all right now very
yeah,
much in the air. So, anyways, Allison, thank you so much
yeah.
for your
Thank you
time
for
and
having
for
me.
sharing all this stuff, these resources. I'm excited to get those out to folks. If you want to reach out to Allison and learn more and bring her into your retail store to help her manage some of this with you, here's her contact information. You can reach out to her via email. If you want to check out our 14-day free trial and get an inventory audit and see what your damage looks like, we can do that for you for free. Check us out on our website at happycabbage.io, or you can email Andrew directly, I guess. Might as well just throw his email out there. Let your inbox get
100%.
spammed. Um,
100%.
but as always, thank you guys so much for joining
Peter.
us. We're going to be providing you an on-demand version of this video for you to watch after the fact. We'll be providing clips, sharing that on socials. Be sure to share it when you see it. And we will catch you at the next one.
Thank
Thank you so
Thanks
you.
much.
so much. Thanks, Allison. Bye.
Bye.